everyone, and welcome to my YouTube channel. Cost of living crisis, interest rates, high inflation. Some of the terms that we've been becoming increasingly familiar with over the last year or so. Interest rates have risen and so has the inflation, making a dent in our pocket. We have been living in an extremely low interest rate environment over the last decade or so. Interest rates have tended to be around the 1 to 2% mark in UK, Europe and in US. And if you track back the history of interest rates over the last 40-50 years, you'll realize that the 1 to 2% mark was abnormally low. Now the interest rates have risen and around 4 to 5% mark, which is probably the more normal range over the last 50 years or so. What I wanted to cover in the video today was the impact interest rates is going to have on mortgage payments for homeowners. Some homeowners are already seeing that impact and some are likely going to see it when their fixed term deals come to an end and they find new deals from their banks. Now, there are some steps that can be taken to reduce some of the burden of the high interest rates. That's the good news. There is no perfect solution. There is no sort of magic wand. But there are steps that can be taken in order to reduce some of that burden, which we will talk about more towards the end. I guess let's start with the basics first. What is an interest rate? An interest rate is the cost of borrowing money expressed as a percentage over a year. So for example, if you borrowed £200,000 from a bank in order to purchase a property and the interest rate that the banks charge you on it is 2%, you will be paying £200,000 times 2% is equal to £4,000 a year in terms of the interest payment to the bank for use of that facility. Now, there are two kinds of mortgages, a capital repayment mortgage and an interest-only mortgage. There is a third kind, which is sort of part and part, which we won't go into the detail of that for the purpose of this video today. A capital repayment mortgage is a mortgage where you're paying part of the original amount that you've borrowed, in this case 200,000, alongside the interest payment that you're making on a monthly basis. And an interest-only mortgage, as it suggests, is a mortgage where you're only making the interest payment. It's sort of like renting the money from the bank, where you're not paying the original amount back, but you're only paying interest for the use of the facility. Now, what happens with interest rates, right? Referring back to the old example, £200,000 mortgage at 2% interest rate. Under an interest-only mortgage scenario, you're paying £4,000 a year or £333 a month to the bank for the use of that facility. And if you were on a capital repayment mortgage, i.e. where you were paying part of the original loan amount back, you will be paying roughly £10,000 a year back to the bank. And the difference between the 4 and the 10,000, which is the extra 6,000, is being used to offset some of the original loan amount, i.e. the 200,000. So at the end of the first year, in this case, you'll have £194,000 left of the original loan that you borrowed. And let's look at what happens when the interest rates, let's say, jump to 6%. Under the interest-only scenario, where you were paying £4,000 a year previously, now you'll be paying £12,000 a year. 200,000 times 6%, i.e. a difference of an extra £8,000 a year. And in case of a capital repayment mortgage, where you were paying £10,000 a year before roughly, in this case you'll be paying £15,000 a year, i.e. an extra £5,000 a year. Now that is a significant increase. Whether under interest only or under a capital repayment scenario, you are seeing a significant increase in your yearly payment. Now if you wanted to calculate the monthly payment, just divide any of these by 12 and you'll get to the monthly payment. Now why the increase in the capital repayment scenario is lower than the increase in the interest-only scenario, we won't cover the details of that today, but that's how the math works, and maybe we can talk about that in a separate video, so how the math or why the math works in this way. But the point is, under each of the scenarios, it is causing a significant increment burden on the homeowner itself. Now, what are some of the steps that can be taken to reduce some of that burden? Depends on the kind of mortgage you're on, the term that you have, and some other factors. But for example, if you're on a capital repayment mortgage, the first thing that you can do is to switch to an interest-only mortgage. Now you would stop paying the original loan amount when you switch to the interest-only, and that's a consequence of that, but at least for some time it will allow you to make a lower payment. Now again, if you were on a capital repayment mortgage, you can extend the term of the loan. So for example, if you had 10 years left on your mortgage and your retirement age was more than 10 years away, you can extend the term of that loan and therefore reduce some of that payment. You can try to renegotiate a new deal with the bank. Current scenario, to be honest, it's not that likely. And fourth, you can apply for a payment holiday. If you did apply for a payment holiday, the amount of time you're not making a payment will be accumulated as interest and will be added to your loan. So each of the steps has consequences. And the best place to start is by talking to your bank about it. But I would strongly advise you to do is to be proactive, call your banks and understand the consequences high interest rates is going to have on your mortgage payments, if not now, later. Now, if you're lucky enough to have a spare room in the house, you can also put it up for rent and accumulate rent of £7,500 a year without paying any UK tax on it. In addition, the UK government has recently launched a partial relief program for people who are finding their mortgage payments to be unaffordable. Now, that doesn't allow you to sort of reduce your rate back to the old rates or whatever, but there are some steps government has introduced in facilitation with the banks, which will allow you a partial relief against your mortgage payment. The best place to start again is to call your bank and understand what that partial relief program looks like. I will attach some links in the description below which will give you an understanding of what that program is, and some other links as well which will help you understand your mortgage a little bit better. Now, another point to note is that in an environment like this, scammers try to get hold of your money. I would strongly advise you not to follow any get-rich-quick schemes, and do refer to official sources only by trying to contact your bank and discussing your options. Thank you very much for listening to me. Hope you liked the video. Please like, subscribe and comment, and in case you want to understand more about any of these subjects, please feel free to comment and inform me. Thank you.